All right, so there's been a lot happening in the last couple months. Obviously, if you've been watching, the Fed rate cut is going to be here on September 18th. We're at a 100% chance of something happening. Now, the question that I kind of keep getting is, will rates drop on the 18th? And basically, if you haven't seen someone else talk about it yet, here's my take. So the banks bake in the interest rates to what they assume is going to happen. Basically, in lending, rates aren't changing every day. As you know, the Fed hasn't actually changed the rate in months, but our rates went up to over 8% and then came back down, and now they're in the low sixes. So what happens with that? Why does that necessarily react even when there's no Fed rate change? So the way the banks do it is they basically are looking at what they think is happening or what's happening in the economy. So when there's bad economic days, when there's wars that happen, things like that, and they're estimating a risk factor. Now, specifically what's happening on September 18th is there's supposed to be a rate cut, right? We're at 100% chance. There's a 30% chance of a 50-point basis cut and a 70% chance of 25. Personally, with the way it's taken so far, it's taken them so long to do this because they're being so conservative on their thought process. They really want to keep inflation down. So that's their biggest fear right now. I do not think we will see a 50 basis point cut. My personal opinion is that that will not happen. I could be wrong on that, but basically, if they do that, there's so many people right now that are sitting on the sidelines waiting. And I think it's actually going to drive inflation up. If they drop that basis point cut, people are going to be freaking out. And obviously, there's only so many people that can actually move in the fall. So it won't be as much of a change as people think. But doing a 25 basis point cut, and then there's supposed to be another one in November. If they do another one in November, it actually allows about 2 months time for the rates to continue to fall. Now, as I mentioned earlier, the banks have actually already baked in what they assume is going to happen to the rates. So most likely, if, next week we see a 25 basis point cut, rates will probably not come down anymore. They're probably going to stay the same or even go up, because what the banks have done is they're predicting in between a 25 and a 50 basis point cut. So they may even be lower than if that 25 basis point cut happens. They may actually have to go up to kind of match that. So there's a lot of different ways to look at it and ways to think about it. But if you're in the market for a home, don't stop shopping to wait on these cuts, because basically the lower the rates get, the more competitive it's going to be. Now, the other side of that is obviously it's also going to get more inventory. There's going to be more people that felt like they couldn't move over the last 2 years that now feel like they're in a place where if they move, it's a little bit more worth it, because now they're not having this massive spike from a 2.5% interest rate to a 7.5%. So once we see the rates in the fives, I think there's going to be a lot more movement in the market overall, but it will get more competitive. We're already seeing it's competitive. We're already putting in offers, and we never really stopped, at least in Sacramento area. We never really stopped putting in offers over asking, and depending on the house. And a lot of times the conversation I have is the house you want, there's reasons you want it, and there's a very good chance the same reason you want it is the same reason someone else is going to want it. So those houses that are more desirable are going to go faster. They're still going to be getting multiple offers. It's not going to come down. As the rates come down, every percent the rate comes down opens up your budget quite a bit, like close to probably a $80,000, $40,000 to $60,000. So, when you're looking at that, as your budget comes up, if the prices come up because it's now more competitive, it's really not doing much for you. But the biggest benefit of buying when the rates are higher, and I'm sure you've heard this, that whole marry the house, date the rate. I don't necessarily agree with that terminology, but it's the basic idea is correct. You can always refinance into a lower rate. Always. You can never take value out of your house. So if the market comes down, if prices come down a little bit, it's not necessarily going to do anything for you except hurt you if you bought at a higher price. Versus if you buy at a higher rate and a lower price, you can always refinance, because most likely when the rates come down, not only is the value going to go up, even if the value stays the exact same, you've been building equity and you can drop your monthly payment. So kind of my prediction for what's going to happen to the rest of the year is basically we're going to see this. I'm assuming a 25 basis point drop in September. I'm very confident that it's not going to be 50. I hope I'm wrong, but I'm pretty confident in that. And then we're probably going to see another one in November, and then a few more next year. So I think within the next year, we're going to be in the high fours to low fives. I personally also don't think we're ever really going to come much under 5%, at least not anytime in the near future, not in the next year. Maybe 2-3 years out as things kind of stabilize. But right now there is too much going on. If they bring these down too fast, like they did during COVID, we're going to see something similar where there's this massive spike in purchasing. Because in case you haven't been up with statistics, mortgage applications, so people actually applying for homes, is the lowest it has literally been since 1995. It is so low, and there are so many people in this business and so many people out looking for homes because the population since 95 has massively increased. We don't have the same amount of people. We have way, way more in the US. So keeping that in mind with what's going to happen this next year, we'll probably see a 25 basis point cut in September. We'll probably see another one in November. Rates are going to slowly be coming down. We'll probably see two to three more next year. But I don't think even the Fed rate is going to really come below 4%, which means mortgage rates will stay around 4.5 to 5, maybe 5.5, depending on kind of where things sit with the economy. So that's my predictions for the year. That's what I think is going to happen. And that's my urge to you, that if you're out looking, don't wait on the rate cut. Also, we're close enough to the rate cut. We have 9 days till they respond to it, that if you truly think it's going to affect your rate that much, if you're not listening to what the media is saying about how the rates aren't going to just drop down, you can float your rate. That's always an option. You don't have to lock in your rate day one. You can always choose to wait. And then once that rate cut happens, you can try to lock in after that. We'll probably see 1 or 2 good days right after that. It could be worthwhile for you. I don't really think so. You know, the number one rule across the board is if you like it, lock it. End of story. If you like your monthly payment, don't worry too much about your rate because your rate will always change if you refinance. So that's my 2 cents for today. If you're out looking at things and shopping and trying to get into a home, don't stop your search. Get out there, get started, because right now is going to be a good time with where the market is going.